What's up guys, daytrading is back to back. Today's video is going to be a short one. We are going to quickly analyze my last two winning trades. Without further ado, I would say let's dive right into the charts. Here we are. I'm going to do a top-down analysis starting off at the high time frames and then step by step breaking down my trades to the low time frames. Now starting off at the daily chart, we still have bullish buys because we are still trading in the all-time highs. Another reason is that we traded down into this fair value gap right here, but price managed to trade all the way up again and closed above this daily fair value gaps midpoint, as you can see right here, which is actually a pretty bullish price signature. Next day, last Friday, we took off, created a bullish candle, and over the weekend we had a little tiny gap right here and had an explosive move to the upside. Let's break it down further. Let's drop down into 1 hour charts. So I was actually trading here in a London session. As you can see, we only had little retracements. Let's quickly dive right into the 5-minute chart. So coming to London opening right here, we continue to the upside and we have created a breaker right here. Okay, we had a low, a high, a lower low, and then a higher high. So this is a typical breaker structure. As you can see, I just marked that out. That's the breaker. The last highest up close candle is actually the most sensitive part of the breaker, but the whole breaker is actually these 1, 2, 3, 4, 5, 6 consecutive up closed candles. So this is the breaker right here. And as you can see, price retraced down into the low of the breaker and then we rallied again up to the upside. Let's just drop down into the 1-minute chart. So as you can see, 5-minute breakout right here. London open was at this candle's open. There is the London first presented fair value gap right here. I actually used this fair value gap as the first presented and not this one, because this fair value gap is actually referred by the algorithm right here. So the algorithm used this fair value gap when retracing and then continuing to the upside. So I took this as the first presented fair value gap, and as you can see, price later referred back to it. And yeah, this was kind of the confirmation for me that price is now wanting to reverse and finally going to the upside, targeting these highs right here. We also have a new day and a new week opening gap right here, so that's your task to figure them out. So what did I do? I waited for the market structure shift and then I dropped down into the 30-second chart. If you don't have the seconds chart, I would absolutely recommend you to buy that trading view abonnement. If not, it's absolutely okay, but you're missing out a little bit. Okay, how did I actually manage to enter in this trade? As we can see, this is an order block. Why is this an order block? Because we took out this low right here. This is the last down close candle that is also trading down into this first presented fair value gap right here. Then we had a change in state of delivery right here at the opening price. So this is technically an order block, and this is an order block retracing down in an order block. And according to ICT, this is called a propulsion block. Okay, so I drew out the propulsion block high, set the limit order right here, and entered exactly at the propulsion block high. Quickly turn on the executions. As you can see here, I entered right at the high point here. Then I set my stop loss below this order block and I had my take profits at this fair value gap low level. Okay, beautiful 1-1. Yeah, actually a negative R trade, but the reason why I wasn't confident to trade or to target these highs right here is because I had 2 losing trades before this one and I just wanted to gain some confidence and get my profits in and be done for the day. That's what I did. 10 handles, which is absolutely okay. Coming to my second trade. Yeah, I thought I was done for the day, but this day's PM session was just too clean. So what actually happened in the PM session? Created beautiful liquidity right here. Price couldn't manage to sweep out these highs right here, and we actually engineered new or even more buy side liquidity. What happened then? We took out PM session opening range low. So the opening range, whether it's the New York AM session or PM session or London session or lunch session or Asia session, every session has an opening range. The opening range is always the first 30 minutes. Okay, so these time-based liquidity pools are all also very important. So this is what I did right here. Here's the opening range low, the opening range high is this high right here, but it's already taken. So we actually swept opening range low and we took out the lunch session sell side liquidity. Since our bias is still bullish, I waited for manipulation to the downside. This happened during the last hour of trading macro, which is from 3 to 4 p.m. What actually happened, we took out these lows right here, created that SIBI right here. SIBI, sell side imbalance, buy side inefficiency, fair value gap right here. And I draw it out and extend it to the right. As you can see, we had a market structure shift. Then price came back down into this fair value gap, inverse fair value gap. Price wasn't able to come down in the lower half. So price stayed in the upper half, which is a very, very bullish price signature. Price then moved to the upside again, which is a change in state of delivery right here. This is again an order block in an order block. So this becomes a propulsion block right here, extended to the right. What happened, price couldn't even come back down into the propulsion block, which is also a bullish price signature. So what did I do? I extended out this breaker again to the right. As you can see, price traded above it, came back down into it again, couldn't manage to trade down in the lower half. Look where the body stopped. The body's closing the upper half. Okay, so this is actually where I entered. As you can see here, unicorn fair value gap right here inside of this breaker. Entered right here. Stop loss was below this propulsion block close, and my take profit was this fair value gap. And as you can see, beautiful setup right here. I also used the new day and new week opening gap that I used for my trade in the London session. Look for them, look them up and draw them out in time, and you can see how price beautifully referred to them. Yeah, trades around new day and new week opening gaps are always like bread and butter type setups, as ICT would call them. Easy one-to-one risk to reward trades. Nothing special, just getting in the profits. One thing I need to work on is my risk management, because in my last trade, 2 trades, I actually lost a bit above $100. Now I had 2 winning trades and I only made almost 50, which, as you can see, doesn't add up. My winning to losing trade ratio is very good, but I have to put more leverage onto those trades where I'm pretty confident that I win these trades, and I have to risk less on trades where I'm like, it could pan out, it could also doesn't pan out. Check out my last video where I broke down my 2 last losing trades, and where I just break down what I did wrong and what you can do in order to prevent those unnecessary mistakes that most of the beginner traders also do. That's already it for today, guys. I hope you enjoyed it, and I would say I'll catch you in the next one. Be safe.